It is becoming kind of a serial novel here, Tyler Crow. We're going to talk about Plug Power. Just had its annual business update. It's a meeting that they have, a little Q&A they have about a month or so before they do their annual results. I'm Jason Hall. This is Investing Unscripted. And Tyler, you ready to talk about what just came out from Plug Power?
Only if you can do it with the movie guy voice where it's previously on Plug Power.
We don't like to make light of this, but I guess in a way we have to, because the company you and I both followed for a very long time. And except for kind of the mania stock period of the past couple of years, generally this has been a really bad stock for investors over the long term. Big losses, hasn't done well at all because the long-term history of the company has been one of destroying shareholder value, of issuing new stock, burning the capital, trying to bring something to market and not generating per share cash flows from it. They're trying to change that though, Tyler. And after a tough run here, today's a good day. We're recording this on January 23rd. Stock's up about 17%. I'm going to share a couple things about why it's up and then talk about what's going on. But just a reminder, this video is sponsored by The Motley Fool. If you're looking for even more stock ideas, go to our special link. Go to fool.com/unscripted. The Motley Fool is going to give you its 10 best stocks to buy right now. Okay, the stock's up. The company held its annual business update this morning, and they issued a press release, Tyler, about the same time that they were getting going with the call. They issued a press release, and I'm going to share the press release on the screen. You called it. This is exactly what you predicted in our last video, and that is that they dropped the prospectus last week to sell up to $1 billion worth of stock. We talked about how dilutive, how value destroying that could potentially be for shareholders. And your prediction was that they were going to start hyping some things. And here's the first one.
Yeah, so the press release that was stated basically is that the liquid green hydrogen plant, which is in its words, is a way of manufacturing hydrogen using water and electricity. It's basically, not to get too fancy with it, but it's basically making a hydrogen fuel cell run in reverse. It even mentions in it proton exchange membrane, which is exactly the technology that is used in hydrogen fuel cells to turn the hydrogen into water and electricity. So they're basically just running it in reverse, where you inject it with electricity and separate it again into hydrogen and oxygen. The plant facility is now going to produce, as it says, now that it's operational, about 15 tons of liquid hydrogen gas. And it is going to start shipping to customers, both customers of its existing forklift business or its fuel cells for forklifts, 15 tons per day.
The 15,000 is the number of forklifts 15 tons a day can fuel.
The idea being is that they're going to sell to their existing customers, who are basically warehouse operators that run hydrogen fuel cell run forklifts on Plug Power's technology. And then if they can sell hydrogen gas or liquid hydrogen to other people who are looking to use it for either industrial purposes or for other types of hydrogen fuel cell purposes, perhaps another revenue generating source as well. What kind of economics is it going to generate? So that seems to be a little bit of a wait and see.
So we do know a little bit about the economics. They've talked about it in prior presentations. The expectation is that over time, this should be a higher margin, a cheaper way to produce hydrogen. Steam reforming is a pretty intensive, carbon-intensive process to crack the hydrocarbon and separate the hydrogen out. The idea, again, is you use electricity, ideally from wind or solar, so you have very low carbon emissions. And we've seen wind and solar costs fall below even some of the lowest cost natural gas. They're competitive and cheaper than. Theoretically, on paper, it should be a cheaper way to produce hydrogen. But we've heard a lot of things from Plug Power over the years, Tyler, that when it comes to profitability and cash flows and value creation, the company simply hasn't delivered on. So you have to take that with a grain of salt. I'll talk a little bit about some of the things that Andy Marsh and CFO, his name slipped my mind right now, but it was CEO Andy Marsh and the CFO who's been there for a couple of years now, talking about everything that's going on with the business, the realities that they have a going concern notice that they filed, which means they don't have the combination of cash flows and liquidity on their balance sheet and working capital, access to capital to fund the business for the next 4 quarters. They talked about how they're taking steps to try to address that. And here's the crux of what we learned. Number one, they said that the vast majority, if you go back and look at the stock a couple of years ago, Tyler, let me share it. 2021, almost $5 billion in cash. And as you see now, it has, and again, this was through the 3rd quarter. We didn't get our 4th quarter results yet. About $567 million in cash. That is a massive amount of cash that it's consumed. And management said they've reached a point where deployment of that capital into, like the Georgia plant, They have a plant in Texas, a plant on the West. They have one in the Northeast that they only need to spend about another $200 million in capital. And they'll basically be done with CapEx on those facilities for an extended amount of time. That at this point, it's just ramping up the facilities and starting generation, and that those facilities will be cash generative, is what management said, and that it would increase their margins substantially as well. So that was the talk track that they laid out. They also said that the plan is to reduce operating costs by 70%. If you think about that $567 million in cash that the company ended last quarter with, and then you look at their operating expenses, total OPEX over the past year, this is where that going concern notice comes into play. Again, this is not up to date because the fourth quarter numbers are not included here, but essentially it's about a year's worth of cash, available cash, because they also have some restricted cash. But all of that cash is tied up with deals with suppliers that they can't touch it until the suppliers get paid or whatever the terms of the agreements are. So the point is that they're saying that they're going to slash costs, they're freezing hiring, and the plan is that attrition, people leaving the company, is going to help address some of their expenses as well. They're not actually actively going out to reduce staffing. So that's a short version of what they said in terms of the steps that they're taking to manage the balance sheet, manage their working capital, and try to get to a point where that they can remove that going concern notice, bringing things like the Georgia facility online. Tyler, this is one other important thing about that facility. An analyst asked what volume was the facility operating at, and Andy Marsh said that it was operating at about 1/3 capacity, so about 5 tons a day. And anticipated that within a few weeks, to quote Andy Marsh, would be producing at maximum capacity. So within a few weeks, they're expecting to be there. Again, this is the first quarter. This is not the fourth quarter, but the idea is that in this quarter, they're anticipating getting cost benefits from that, whether it's just reducing costs to fulfill existing agreements, or it's to generate more higher margin revenue, selling the production of that. We're going to see exactly how it works out from this one facility, but that's a short version. Tyler, there's one other thing that they talked about that I'm surprised we haven't seen a press release for, but I would imagine that we will see a press release for very soon.
Does it involve the Department of Energy, Jason?
Yeah, yes, it does. The Department of Energy has a number of funding and financing tools, part of some of the recent legislation that's been passed around renewable energy over the past few years. And in this case, Plug Power is applying for up to $1.7 billion in loan to help fund future expansion. So that's a big number, right? What management said on the call was they've basically submitted their application, including a term sheet, which has conditions and all that sort of thing. He said, you don't get to this point of filing it unless you're pretty sure things are going to move forward. But they also said that realistically, we're talking like the third quarter before that would be approved, right? So we've got it filed. There's still waiting on conditional approvals, all of those steps in the process. And I think an important thing investors need to absolutely understand about these sorts of deals is this isn't going to a bank and opening up a revolving line of credit that you can use to fund your working capital shortfalls or anything like that. There's going to be very specific teeth and terms to these sorts of deals about how they can use that funding. And generally, it's going to be used for new facilities, establishing new infrastructure, not to cover the shortfall because of bad deals that they wrote 3 years ago that are generating negative margin revenue. So that's a really important thing investors need to understand about it. So that's where we are, Tyler. We don't know. Stock's up. Stock was really positive on the fact that they've got that Georgia facility producing. Learn some things about future capital, learn some things about what they say they're doing to cut their expenses, to try to get to at least a balance on their cash flows and on their working capital so they can remove that going concern notice. But as of right now, we don't really know anymore.
Now, to keep hammering the exact same point that I keep saying with this company, but until those things are actually proven out, where the things that are said actually show up in the financial statements of the company, it's just going to be a prove it moment for me. We've been hearing it for a very long time, but yet they have not materialized in terms of financial success. Until we actually see financial success on the balance sheet, on a financial statement, I'm just going to treat this as every other statement the management has said up till now.
I'm going to bring up the stock price again and just walk backwards through some things here. So again, it's up about 16%. It's been super volatile. You go back to the beginning of the year and the stock's still down 27%, right? It's been very volatile. It's likely to continue to be very volatile. You look like back over the past 10 years, it's basically break even Again, this massive run up we talked about when we saw the speculative bubble of all things growth, it's down 95% since then. I'm not even going to get into the value destroying reality in terms of capital destroying reality of this business over time. Andy Marsh is incredibly believable. It's a superpower. And he tells a great story, and he's a very optimistic guy. He really is. Whether this is just his canny nature to raise capital or truly believes in this business, maybe some mix of both of those things, the business hasn't delivered, to Tyler's point. And that's the thing. And I know we're going to get hate mail. We do it every time we make a video. I'm going to have somebody talk about how my hair is too long and how I live in a double wide trailer and like just all the crazy mudslinging things. That's fine. We can take it. That's totally fine. But look at the results of the business over time and just be really cautious investors. I would love to see this company turn it around, Tyler. That would be great for humanity. You and I both have young kids, right? It would be incredible to see something like what Plug Power is doing and in terms of how it could be beneficial for the world really take off, right? It would be great. It'd be even better if it actually was good for investors, which it has not been in the company's history. Until they prove it, I'm 100% with you. Let them earn it. Let them demonstrate that they can actually generate profits and cash flow before you throw money in it just because the stock is down and it looks like there's a glimmer of hope, because they've always been good at dangling that shiny lure out there in the past of hope and then just incinerating more investor capital.